Hello traders. So today we'll be looking at gold. As you can see, we are in a range, on a really big range, and on a smaller picture we are on a downtrend where we have our supports and our resistance. So we have a support right here, we have another support and another possible resistance above. On the daily chart we can draw a trend line, and as you can see the market has been falling, but now we broke the trend line, but we did not broke the last high. As you can see, we have been doing lower highs and lower lows like this on our chart. And now we are in kind of the middle of nowhere, because we are above the trend line, but we are still below the last high, and we did not broke the low. If we go to a lower time frame for the 4 hours, we can see that we are in a range. We can draw a box around it so you can see it, and this box was broken 2 times, one above and one below. It was both of them, they were fake breakouts because they broke and they came back inside. How could you trade this? You can go to a 1 hour time frame, and the trades that I took was one above here and one below. Looking at this hour, as you can see, we made a really big move up, and after that we made an indecision candle, and all candles after that they were inside. None of the candles broke the high. So what could we do? We could draw another box to high, and we could take this break, this after the 1 hour close. But to have a bigger and better risk reward, you can go to a lower time frame, to the 5 minutes, and take a pullback. So we broke around here, we made a really small pullback, and here it was a bigger pullback. How do you know that this was a really nice pullback? Because you can use a Fibonacci and wait it to the market to go to the golden box between the 0.5 and the 0.6. In here you can have a really good risk reward. I took a short position with a stop a little bit above, because we are on a 5 minutes time frame, so it's very volatile, and take it to the end of our box, to the bottom. It would be around here, a little bit above. And as you can see in here, you can have a risk reward of 1 to 4, and it was a really good trade. After that, the market went to the bottom, went above, not to the last high, and it went below again. When you go to the bottom, we see here an indecision candle that we can draw a box around it, as always, and we see the break in the 1 hour time frame. What would you do now? You would go to a lower time frame again, to the 5 minutes. In this 5 minutes time frame, you see a little small pullback of 2 really small candles and the continuation of the move. So we can draw our Fibonacci again to see if the pullback is enough. Yes, it was enough. It was until the 0.6, and the 1 hour closed around this candle here, and our box, our support was around here. What did I do? When the market let the market go above and wait for the pullback, and I took the trade right here after this rejection. I took the long position with the support below, with the stop loss below, and the take profit above, a little bit below our box, because we never know if the market will go to the box or not. In here you see a trade that with a risk reward of 3.5 was a trade that I took today. It was a really nice trade. Not all trades work like this one. A lot of them are fails, but if you have a good edge on the market, you may take really good trades, and in the end of the year, I'm sure you will make a really nice profit. So continue your good work and see you soon.